We spend so much time analyzing the world outside charts, headlines, expert predictions, thinking the key to wealth is out there. But the greatest risk isn't the market, it's you. The real danger is how you react when things don't go as planned, panic, euphoria, or rationalizing bad choices. Many brilliant investors lose fortunes not from bad analysis, but from fragile temperaments. Your relationship with fear and greed shapes your results more than any spreadsheet. Success in investing is about behavior, not just knowledge. You can know every formula and still fail if you can't control your impulses. The market is external. Your mind is the real battlefield. Mastering your psychology is the first step to building lasting wealth. Knowledge matters, but it's only a small part of the puzzle. The real work is building a decision-making framework that can weather emotional storms. Remember, the market is just the stage. You are the lead actor and your psychology writes the script. Investing looks like a numbers game, but it's really a mind game. The math is simple. Buy low, sell high. But we're not robots. Our emotions, biases, and experiences shape every decision. The market trends upward over time, yet most people miss out because they can't stomach the ride. The gap between what's probable and what's emotionally tolerable is where most investors fail. The real challenge is staying invested when your instincts scream to run. Your spreadsheet doesn't determine your success. Your ability to stay calm does. The market doesn't care about your feelings, only your reactions matter. A simple plan and strong mindset often beat financial genius prone to panic. Everyone faces the same psychological pitfalls no matter their background. The market tests your character, not your IQ. Winning isn't about outsmarting the market. It's about outsmarting your worst impulses. That's the real challenge. Fear and greed drive the investing world and often drive us off course. Greed whispers to chase hot trends and take big risks, fueling bubbles and FOMO. Fear screams to sell in a panic, turning temporary losses into permanent ones. This cycle, buying high from greed, selling low from fear, destroys wealth. The cost of these emotions is real, showing up as the gap between market returns and what investors actually earn. Your feelings are expensive advisors, and usually wrong. You can't eliminate fear or greed, but you can recognize them and build systems to keep them in check. The key is not acting on emotion. That's how you protect your wealth. Beyond fear and greed, our brains are wired with biases that sabotage us. Confirmation bias makes us seek only information that supports our beliefs, creating echo chambers. Loss aversion means we hate losing more than we love winning, so we hold on to losers too long. Overconfidence tricks us into thinking we're smarter than we are, leading to risky bets and excessive trading. These biases work together: overconfidence in a pick, confirmation bias to support it, and loss aversion to never let go. Recognizing these mental traps is like turning on the lights. You can finally avoid what's tripping you up. Awareness is the first step to better decisions. Don't let your brain's shortcuts cost you money. Building wealth is a long game and your mindset is your strongest asset. First, accept that markets are unpredictable. Volatility is the price of admission. Don't fear downturns, expect them as part of the process. Second, focus relentlessly on the long term. Ignore daily noise and short-term drama. What happens this week is irrelevant to your 20-year goals. Third, practice discipline. Create a plan and stick to it, especially when it's hard. Automate your investments and rebalance on a schedule, not on a whim. Discipline is about doing the boring, right thing over and over. Building this mindset is a lifelong practice. Humility, patience, and emotional grounding are key. This mental fortress protects your wealth better than any complex strategy. It's your greatest asset, and it's entirely within your control. Keep building it every day. That's how you win the long game. Knowing your biases is one thing, fighting them is another. Start with diversification. Spread your investments to protect against being wrong. Use data and logic, not stories or feelings, to guide decisions. Write an investment policy statement, your personal rule book for tough times. When emotions flare, refer back to your plan. Don't be afraid to seek professional help. A good advisor is a behavioral coach, not just a stock picker. These strategies create systems that keep your emotions in check. Diversification, logic, and outside perspective form your defense. They help you get out of your own way. That's the real secret to reaching your financial goals. The real journey in investing is mastering yourself, not the market. Every market swing is a lesson in your own temperament. The best investors are lifelong learners about history, psychology, and themselves. Honest reflection on your decisions, especially mistakes, leads to growth. Identify your biases and build strategies to counter them. You're not just building a portfolio, you're building character. Mastering your mindset is the final frontier, and the most rewarding. Get that right and financial success will follow.